Silver bars in your IRA. Welcome back to Golden Rule Radio. That's what we're going to talk about today.
That's an intro right there. The intro of all intros. So let's start with silver bars.
So I was all prepped to talk about gold, and here we're starting with silver now. So have to flip my charts around. Silver did something that gold hasn't yet. You know, we've been calling about that 1212 mark on gold for a while. We still think we're pushing our way down there. Silver did, however, come down to that fib level. So I actually got on the phone with a client of mine yesterday who's kind of been watching this for the last few weeks. So we were pretty excited to finally get a position placed down at that fib in the mid-15s. And lo and behold, today, Wednesday, we're up.
A little bit of a bounce. And I also have some people on the fence there wondering if we're going to see 1550. What do you think about that?
I mean, right now, you know, we were talking about this a few minutes ago. Right now, we're seeing some pretty normal trading up and down. We mentioned this last week. Robert talked about the seasonal averages and the seasonal lows that we've seen the last couple Decembers. This December's no different. Granted, we can call it a seasonal low. Gold's still up, what, 8% this year?
That's right. And if you look at that in comparison, I know that it gets discouraging as an investor that somebody that has already acquired physical metals in your portfolio. To see it come down at the end of the year, we should almost get used to it at this point. That being said, if you look at what the U.S. dollar did this year and what your gold should have done, that to me is a critical piece of the discussion. U.S. dollar index is down 9% on the year.
Right, and we never want to deny the fact that there are great opportunity to make a ton of money in gold sometimes. But I think the important thing to remember is just having that well-balanced, diversified portfolio so that when the equity market's doing exceptionally well, you take advantage of the equities. When the dollar's doing exceptionally well, you take advantage of your cash positions. And when commodities are doing well, you can take advantage of your commodities.
So how well has the dollar done this year?
Well, like we were saying, if it's off 9%, it hasn't done well at all. People that fly to the safety of the currency and sit in cash don't understand that you're exposed to the dollar weakness. Every currency, as we've said in the show, goes down over time. The U.S. dollar is no exception. It loses purchasing power over time. So let's say that the inflation rate, as the FOMC meetings are going to say today, is, 1.7%? It's actually closer to about 9.8%. if measured the way that it was when Reagan was president. So they fudged all the numbers. And you and I know that on Main Street. We know what the true inflation rate is. So what has the dollar done? Robert, I will always answer that question as gone down.
So to conclude that little discussion, we've got the dollar down this year, 8-9%, gold up right now, 8% or so. So if you did have this barbell approach that we've talked about in the past with having cash and gold and just kind of having the defensive position, well, your dollar's not done well, your cash position has not done well. Gold, even with its decline into the mid-1200s right here, it has done well.
That's right, Robert. And this is actually a good opportunity for us to mention the fact that we don't think that you need to run from any particular market fully. Your barbell approach is certainly a defensive position. If you look at it as a three-piece pie, you can throw a growth component into your portfolio, and that's what we've been recommending for over 30 years. You can have an equities exposure, and you're very pleased with what that piece of that pie has done. The other two pieces of the pie, being a little more defensive, tend to counter each other. And what we see is two of those pieces do well while one piece falters. That's a balanced approach to your portfolio.
Right, and the growth doesn't have to be equities too. I mean, the last couple of years, it's been a great place to have your growth position there. Obviously, Bitcoin and other cryptocurrencies have been a great growth opportunity for people and may continue to do so in the future. But the reality is we can't forget what happened 08, 09, 2010. Eventually, markets do sell off, whether it's manipulative moves, whether it's just a healthy, natural change in the direction of investor sentiment, whether it's a political or geopolitical motivation. The reality is growth assets like real estate, like equities, like the bond markets, like even like precious metals can have their sell-off points. And you can speculate. And speculation tends to be the thing that people run towards. Maybe because it's been marketed to us that way by New York for the last 40 years.
It's exciting.
And B, it's exciting. Exactly.
Right. But when greed turns to fear and it's no longer exciting, Robert's barbell approach comes in.
So the precious metals give you that protective hedge when the equities do turn. And a cash position, even though we don't like the U.S. dollar and what the Federal Reserve is doing with the dollar just provides you opportunity.
Well, let's go into that because we have a big meeting today. The FOMC minutes will be released here this afternoon as we're recording. What are your expectations, Robert, in terms of what they're going to do with the rate hike?
100% of market participants expect a rate hike. So I don't
Another
think there's
quarter
gonna be
point.
any differing. I think actually what is more uncertain than the FOMC meeting minutes is what Draghi's going to say tomorrow. I think that's where the uncertainty falls. Is he going to be hawkish, dovish? So that's what the market's on hold for besides the FOMC minutes today.
Yeah, and with Black Friday through Christmas spending, it's reasonable to expect the stock markets to stay propped up for the next couple weeks till Christmas is over. So I think they could squeeze a rate hike in here.
They have the last 2 years. It's a safe time of year to do it, to your theory, right? Make it 3 years in a row, just like 3 years in a row where they've driven the price of gold down into the close of the year. That's perfectly fine. But we do have to keep in mind that it is back-to-back days where you will see some dollar index volatility as a result of those two announcements.
Yeah, volatility's been low across almost all markets, and I think we're going to see volatility rising as we go into the first of the year.
And that rate hike should be good for the dollar, at least short term, and that's going to bring us, at least from a charting perspective, we've been talking about the dollar pushing back up to the mid-95 level before we see it continue its water slide pattern. So I think that's going to give a little credence to that as well.
So what is your target for gold then? We sort of skipped over that. You know, if we come full circle before we end the show, next level of support in your opinion?
Like what we said last week, this is an opportunity to pick up gold in the 1200s. It may dip down into the 1100s, but I think the two numbers to watch would be 1200, or if you want to get technical, 1212. And then if we go and dip below 1200, I think you've got last December's low of 1125 sitting there as strong support.
Yeah, I think with the movements we've had down in gold the last couple days, it's certainly taking a bit of a break right here. We're right in between those two levels. So if I'm a betting man, I see a push up to about 1263, back up to that 1263 level on gold. Then we're going to have to decide. Could push right through that, keep going back up. Maybe we end the year close to 1300 like we've spent the last couple months at. Or I will hopefully finally see that 1212 number where I'm going to back up the truck, talk to the wife, and see where I can pull some money out of what couch cushions.
Do either of you see any declines after the first of the year? I mean, any concerns there that this trend would continue?
Well, what happened the last couple of years in January is we started to see higher prices with gold, started to move up higher aggressively. I think this last year, the one time that we had on our show saying this is your opportunity was when it took a little respite right there at the end of January and pulled back. And that was it. You didn't have this price yet. I think that was like 1160, 1175 is when we said, hey, this is it. And we haven't been back there. Maybe we revisit that now. I hope we do. But that is your opportunity.
I think the other thing to keep in mind is that this is the time of year where they smooth over all the bad economic news, and then the reality rears its head after the first of the year. And there are some underlying fundamentals that still speak of a negative economic environment in the United States. And U.S. stocks, yeah, okay, they're rolling, and you've got Asian market weakness, but you've got the highest PPI since January of 2012 right now. And so I think that that's what's going to ultimately drive the metals prices higher, is the reality and the negative news that starts to come out after the holiday season.
Yeah, our kids tend to forget that you should be good throughout the whole year, but somehow we all remember you got to be good the last month of the year while Santa Claus is actually watching. So I think the Federal Reserve sort of does the same thing, like you mentioned. Smooth out the economic numbers, get us into January. Well, now all of a sudden it's tax season, so nobody's happy and jumping up and down anymore, so it makes it a lot easier to make some changes come January, February, because people are already kind of in a cranky mood.
The other unknown, obviously, is geopolitics. We know we have political volatility that will continue into 2018. Geopolitically, we have some new threats, big threats, North Korea to keep in mind, and those that are unknown. So remember, gold reacts. It's not always just setting its own market. It's responding to news and world events. So we'll keep our eyes open in 2018, as will you. And so with that, we'll wrap up today's show. We appreciate you listening.
So as always, if you like what you heard, click that subscribe button, ring the YouTube bell so you get notifications. Head over to Twitter at ICA Gold, engage in the comments. And if you have any questions, you can always call us at 1-800-525-9556.
Enjoy your silver bars.